Okay, financial news can feel, well, overwhelming sometimes, like you're trying to piece things together. But today, we're doing a deep dive into something that actually paints a surprisingly clear picture.
That's right. We're looking at CarMax's latest numbers Q1 for their fiscal year 2026. And our goal here is, to cut through the noise. What really drove their strong performance? What do their moves mean for the market? And maybe most importantly, what does it mean for you?
Yeah, CarMax's Q1 sales really seem to hit overdrive. They reported net earnings per share jumping a massive 42.3% up to $1.38.
Wow,
And revenue hits $7.55 billion. That's up 6%. Those are some pretty strong signals.
they really are. And what's fascinating here, I think, is that these aren't just numbers in isolation. They really highlight how strong their omni-channel approach is.
Omnichannel meaning online and in-person working together.
Exactly. Their digital side now supports, get this, 80% of their retail sales. And 14% of those sales happen entirely online.
80% supported. That's huge.
It is. And this deep digital integration, it's not just like a nice to have. It fundamentally changes their costs, their reach in the market. It's creating this competitive moat, you could say, that traditional dealers find really hard to get across.
And it shows up in customer satisfaction too, right?
Yeah, they hit a record high net promoter score, so customers seem to like it.
Okay, but here's where it gets really interesting for me. They did all this while getting more efficient. Their SG&A expenses, selling, general, and admin, dropped 680 basis points.
Right, 6.8 percentage points.
Yeah, as a percentage of gross profit, that's significant. And their retail gross profit per used car hit a record $2,407. So the question is that kind of cost control sustainable, or are customers maybe paying for it somehow?
Well, that's a fair question, but what it really signals is strong cost management and operational leverage. It really underlines their pricing power, sure, but also just pure efficiency in things like reconditioning cars, logistics.
Getting the cars ready and moved around.
Precisely. And they've got help from new standalone centers near Phoenix and Dallas dedicated to that. It shows that even when you're selling tons of cars, really mastering the operations step by step can unlock serious profit.
Hmm.
And yeah, so far it seems sustainable.
Okay, but like any deep dive, there are always nuances, right? Their finance arm, CarMax Auto Finance, or CAF, its income actually dipped a bit.
It did, yeah, down
Mm.
3.6%. Even though their net interest margin, the profit on the loans themselves improved.
So what does that tell us? Is it just a small blip or maybe something more worrying about credit quality down the line?
Well, it definitely raises that question about credit. The diff was mostly because they had to set aside more money for potential loan losses,
Okay.
mainly hitting loans made back in 2022 and 2023, those sort of older vintages, plus just general economic uncertainty.
Oh, right, it makes sense.
But CarMax is being pretty proactive here. They expanded a funding program for non-prime borrowers, basically setting aside $632 million in loans to be packaged up and sold off. That's called securitization.
So bundling loans and selling them to investors.
Exactly. It shifts the risk off CarMax's own books, frees up capital so they can keep lending. They're calling it a new funding lever. It helps manage risk while still pushing towards their goal of getting more people to use CCAF for financing.
And management seems confident too, right? They sped up share buybacks.
Yeah, they bought back nearly $200 million worth of their own stock just in Q1. And they still have authorization for another, $1.74 billion. That signals confidence.
And here's something I found surprising. They saw really strong sales growth in cars priced under $20,000. Often older models, they're value max cars.
Yeah, that's fascinating, isn't it? Almost counterintuitive when you think everyone wants the latest tech.
Right.
It just shows how adaptable they are, meeting different needs across the price spectrum.
So being nimble.
Absolutely crucial today. And they're leaning on AI, too, for things like managing inventory, setting prices. Even their AI virtual assistant is apparently more productive. Saw a 30% improvement in its containment rate, meaning it handled more queries without needing a human.
So technology is driving efficiency and customer experience. Very tangible results there.
Yeah.
So putting it all together, CarMax's Q1 really shows a company effectively blending that cutting-edge digital stuff with some pretty disciplined financial management, all in a market that's constantly shifting.
Yeah, and we kind of zoom out, connect this to the bigger picture. You have to wonder, could CarMax's approach be a blueprint? Leveraging tech for that seamless customer journey combined with smart financial moves like securitization.
A model for others.
Perhaps. What other industries could maybe take a page from their book? use similar omni-channel strategies, similar risk management to, transform how they deal with customers and manage growth, especially when the economy feels a bit uncertain?
Interesting question. Definitely something to mull over until next time.